Hey guys, how's it going? And thanks for coming. I'm Nick and this is Real Life Money, where we talk about real life and money because you know schools aren't, so let's get started. So happy New Year's guys, it is finally 2018 and there's probably some New Year's resolutions going on, whether you want to save more money, whether you want to get a hold of your finances, or even start investing, which is exactly what this video is going over, how to start investing in the stock market for beginners. Now real quick, I just did another video about how to save more money for the new year and about budgeting. So if you're interested in that topic as well, I'll leave a link in the description for you to check out. So the stock market. What is it? Can you get rich from it? Can you lose all your money from it? Is it risky? What's going on? Well, let's start looking at a couple of myths that I think a lot of people have. The first myth is that the stock market is a get-rich-quick scheme. Now, there are a bunch of people out there that do make a lot of money in a very short amount of time. But here's the thing, guys. With more risk comes more return. So as quick as you make that money, you could lose that money just as quick. So if you're investing in those types of stocks, and by the way, there are different types of stocks, there are more riskier ones, and there are safer ones, which we will talk about. Now, tripling your money in a year, it is possible, but history shows that the stock market does return between a 7 to 10%. Now that's the average. Last year, 2017, very, very beautiful in the stock market. It actually returned around a 20%. Now that is above average, so just realize that that doesn't happen every single year. Another myth is that you need a lot of money to invest in the stock market. You need tens and tens of thousands of dollars to do anything. Well, that's simply not true. You could start with $1,000. You could start with a couple $100. There are apps out there that you could just start with. If you want to, just buy one share of something. If it costs $20, all you need is $20. And the last myth is that you have to be some genius, right? You have to be some Einstein, you have to be the next Warren Buffett, and that is not true. You could be normal, like me, you're normal, we could actually make money in the stock market. Believe it or not, the normal person can use stocks to become rich and wealthy, which is what we're going into. So to start, you have to understand that the stock market is a ride, guys. In the short term, it has its ups and it has its downs. Now notice I said in the short term. If we step back a little bit, the stock market for the long term is actually very nice because it's basically always up. When there is a down in every situation, every circumstance, every crash, there is followed by an up or a rebound. So if you get out at the bottom, yeah, you lose your money. But if you stay in it, you actually make that money back, which is why most people think the stock market is risky and do not realize that you could have made your money back and even more than. I am relating to 2008. That is the Great Recession. There was a crash of around, let's say around 50%. And so, yeah, if you had $1,000 in the market, you would now have $500. But the thing where most people don't look is afterwards. This is 2018 now. You would have made your money back and probably doubled your money since then. You would have done very well if you stayed with it. When things are down, just consider it as a sale. Just like at a store that you want a pair of jeans and it's on sale, why wouldn't you buy the sale? So that's basically what a stock market crash or correction could bring, is that stocks are cheaper, you would want them for cheaper, right? So now you have to decide how interested and passionate you are in the stock market. Do you want to do research? Do you want to look at companies and stock prices and all that stuff? If you're not, that's okay. The thing is, guys, you don't need some fancy financial planner to help you manage your money when you could do even better than them. Mostly because your financial planner charges fees, and that deducts from your returns in the stock market. So instead of paying for fees, you could invest in something called an index fund, and it just follows the stock market. It could follow, let's say, the top 500 companies in America or in the world, and you just, whatever the stock market returns, you get that with very, very, very minimal expenses. So if you want something very easy, you don't have to do any type of research, that is the way to go. It's all about your mindset, your emotions, and how you really think, guys. That's what the stock market is how we could handle ourselves. Many people think that they could beat the market. A lot of mutual funds think that they can beat the market, and a lot of them don't. People think they could, but they simply don't, guys. So if you just invest very simply, like we said, like an index fund before, you could actually do better than most of the people out there who are actually doing research and trying. People get scared, they get fearful of the market, so they pull their money out at the bottom, and then it starts going back up, and they get in at the top, and it's just, you cannot time the market perfectly. So a couple of tips with that is, don't let your emotions get involved with your money. You stick it in there, and that's kind of it. Now, if you're a millennial age, around my age, you have time to grow your money. You know, you don't need to retire by next year. Of course, it would be nice to, but, you know, retirement and whatever you want to build up to is like decades away. So you have time to grow it. So if anything happens in the short term, why should you care? Because you care about the long term. Yeah, there could be a dip in the short term, but you hold on to it and it grows over time. Now, how could you invest in the stock market? Well, there are a couple different ways. And a lot of people have heard of a 401k. Usually, or sometimes an employer gives you a retirement account and you're able to contribute in that way. So it's a retirement account and you're able to buy mutual funds, certain funds in the 401k that you save for retirement. And it's in the stock market. You can choose bonds if you want as well, but that's one way to invest in the stock market. Another similar way is another type of retirement account. It's not a 401k, but it's a Roth IRA. It is a retirement account, still grows for the long term, but instead of using pre-tax money like the 401k, a Roth is after-tax money. Now, I want to keep it simple for you guys, but those are retirement accounts that usually have mutual funds in them. So you choose a mutual fund that is involved with the stock market, and that's how you invest in the stock market. Now, aside from mutual funds is stocks. You can do your research for individual stocks, individual companies. Now, I think when people think of stocks, they think of just super, super risky, and they think it's like all or nothing, kind of like penny stocks, and it is completely different. There are penny stocks out there. There are very small companies that probably no one has ever heard of, and that's why it's so risky. Yeah, you can double, triple your money in like a day, but you could also lose all of it in a day as well. So penny stocks, small companies are riskier. You could also invest in larger companies. These are safer. An example that every single person in the world knows is Apple. Now, do you think Apple is going to go bankrupt and go to $0 share tomorrow? Probably 99% unlikely. Probably even higher than 99%. But with these larger companies, guys, they're actual businesses. When you invest in a stock, it's a business. So businesses, they continue to grow and develop over time, and they want to grow and develop. That's what a business is. So when you invest in a stock like Apple, you're investing in Apple, like the company. It's not going to $0 anytime soon. So that's why I like larger companies, because they're safer. That kind of makes you feel a little bit better, doesn't it? That it is safer. It's not like a complete gamble if you put money into stocks. especially if you have the long term in mind. So those are kind of some ideas of the stock market, guys. Of course, you realize that this is just different ways to think, because that is investing, how we think. Now, honestly, the best way to learn about the stock market is to actually do it, to actually invest in the stock market. Now, yeah, do your research to know like what to do and how to start, but sometimes you just gotta do it. Now, let me tell you right now, there is always going to be bad news out there. There's always going to be some type of fear, and people are going to be scared for whatever reason. There's going to be economic problems, there's going to be political problems, there's going to be natural disasters, everything out there. And that's just how the world is, unfortunately. However, the stock market over the long term continues to go up because businesses continue to grow and develop. So start off small. You don't have to put all your money into the market. Start off small, learn, see how it goes, and you grow from that. May I suggest to not use money that you actually need? So if you have $1,000 and you need that $1,000 to, live, eat, and bathe, don't invest that, because you can lose it in the short term. Not all of it, but it can go down to a certain percentage. So don't use money you cannot lose, guys. So if you have like $1,000 to invest, or looking to save up $1,000 to start investing, I do have another video going on about how to invest your first $1,000. So if you're interested in that, I would definitely recommend it. Leave a link in the description to check out. So focus on the long term, guys. The stock market could be used by normal people like you and me to become millionaires. It is not as difficult to become a millionaire as some might assume. It is possible. So personally for me, I do have individual stocks as well as mutual funds and retirement accounts. As you live and grow, if you continue watching videos and stuff like that, like for me personally, I have monthly automatic contributions. So it automatically gets taken out of my bank account and thrown into the stock market every single month. I don't have to do anything. I don't even have to know about it. It just happens. So over the long term, you make a nice buck. Now, before I let you guys go, just have to let you guys realize that why people don't have money or why they don't have enough for retirement is not that they don't know what to invest in. It's like, oh, they should invest it in this stock or instead of that stock, or should have put more bonds into the portfolio or whatever. That's not the main problem. The main problem why they don't have enough money for retirement or for their future is simply due to the fact that they're not putting money into it. They're not contributing anything to it. So obviously, I don't care what type of investment that you're thinking of, you could think all you want. You're not doing it. So stick with it, guys. I believe in you, especially with the new year, 2018. It's going to bring some awesome things for us. So if you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because I believe that we could finally get a hold of our finances and stop following the man. So thank you so much for watching, and I'll see you in the next one.